Welcome back to Alpha Recap. I'm Martin, and today we're unpacking the market headlines that kept things quiet on Monday but set up a busy week ahead.
And I'm Gareth. Short holiday trading doesn't mean nothing happened, far from it. We've got project wins, M&A, AI moves, and a cluster of policy risks that could really steer flows. Let's jump in.
Quick snapshot first. Markets were muted for the Martin Luther King Jr. holiday, but headlines across utilities, materials, healthcare, and real estate gave investors tangible things to chew on. On the flip side, industrials and energy are wrestling with policy and geopolitical risks. Crypto was steady too, Bitcoin around $92,000 to $93,000.
Right, that sums up the mood: selective optimism. Where there's project visibility or M&A, momentum picks up. Where there's policy or geopolitics, folks get cautious fast.
Let's start with the winners. Utilities were top of the list. Avangrid announced a big transmission move, about 1.2 gigawatts of HVDC. That kind of project is multi-year and rate-base accretive, which basically means steady, regulated cash flow for years.
Exactly. Big transmission projects translate to predictable returns under regulated regimes. Also, Constellation Energy wrapped up a major acquisition, reshaping generation mixes. For investors who like yield plus steady growth, that's attractive.
Materials and mining also showed real momentum. Tungsten and high-grade silver deals, plus a services contract worth about 750 million Australian dollars. That's backlog visibility for contractors and cash for miners, which reduces execution risk.
And that matters because those metals feed electrification and defense supply chains. When offtake and contracts are locked in, financing gets easier and project timelines look cleaner. It's the difference between hope and visible revenue.
Healthcare had a nice set of headlines too. Diagnostics and therapeutic breakthroughs, including a saliva concussion test and a novel lung cancer inhibitor. Plus big philanthropic money for AI-driven population health. That's not just hype. That can change care pathways.
Philanthropy accelerates adoption because it helps institutions pilot machine learning tools without the same near-term ROI pressure. Long-term, better diagnostics reduce costs and create new revenue streams for companies that own the tech or the test.
Okay, flip side. Industrials felt the chill after a presidential mention of a possible 10% tariff on goods from 8 European countries. Even the threat of 10% is big for manufacturers with long supply chains in Europe.
Manufacturers hate uncertainty. The prospect of a 10% levy forces rethinking sourcing, raises input costs, and can push companies into inventory builds or hedging. For thin-margin parts of the industrial complex, that's real pain.
Energy was another headline-sensitive group. LNG projects face political pressure, and U.S. policy in some places has leaned pro-gas and even pro-coal, which complicates the transition narrative. So if you've got exposure to export infrastructure, expect volatility.
True. Political risk around permits and local opposition can make returns lumpy. If you want energy exposure without that permit risk, look for integrated names or utilities that are pivoting toward decarbonization in a measured way.
Communications and media also had headline risk. Hollywood reputational issues, a big indie title hitting a $100 million milestone, and big sports events that drive advertising cycles. Content is binary. A hit or a miss can swing revenues a lot.
Advertising and reputational risks are real. One high-profile controversy or advertiser pullback can squeeze margins quickly. Large content owners with diversified streams can absorb hits better than pure-play broadcasters.
Now, crypto. Bitcoin traded in a fairly narrow range, about $92,000 to $93,000, as ETF mechanics and institutional buys balanced outflows. Davos and macro headlines can still spark volatility, though.
The structural story is there: institutional demand, corporate treasury buys, sovereign interest in some cases, but short-term moves will be all about flows and macro risk. If big trust or ETF flows swing, prices will amplify quickly.
Consumer and retail had some interesting AI-driven operational moves. Walmart reshuffled U.S. leadership, expanded pharmacy infrastructure, and rolled out AI sourcing and advertising tools. That's execution-focused and could protect margins.
The caveat is always execution. Announcements are one thing. Measurable improvements in same-store sales, e-commerce growth, and inventory turns are what prove value. Watch next quarter KPIs closely.
Real estate, active deal-making, office and industrial transactions, multifamily lending advancing, and a notable New York sale. Capital is still available for assets that make sense, especially industrial and multifamily.
Office is more idiosyncratic. Location and repurposing potential matter. If you want targeted exposure, sector-focused REITs or funds are smarter than a broad brush right now.
A quick look at cross-sector themes. First, infrastructure and project execution are underpinning outperformance in capital-intensive sectors. When projects move from planning to contracted revenue, it lifts materials, some industrials, and real estate services.
Second, policy risk cuts across the board. Tariff talk or unclear hemp guidance ripples through industrials, consumer goods, and cannabis. Those are headline-driven moves that can override fundamentals in the short term.
Third, AI isn't just tech, it's horizontal. Retail, packaged foods, healthcare, and software are all using AI. That means investment interest can hop across sectors, but you need execution metrics, not just glossy press releases.
And fourth, geopolitics and commodities keep energy and crypto sensitive. Watch export approvals, local permitting news, and on-chain liquidity flows. Those are the real amplifiers for price swings here.
Let's walk through sector-by-sector highlights quickly. The why and what investors should do. Cannabis first. Federal hemp definition debates and mixed state moves. Missouri guidance on patience, Indiana setbacks, mean uncertainty persists.
That uncertainty hits access to banking, interstate commerce, and tax treatment. For multi-state operators, policy risk is a primary driver of returns. Unless you see federal clarity, it's a high-beta, headline-driven trade.
Communications and media, hits and misses on content plus reputational risk. A breakout film can be huge. Controversies can cost ad dollars. Expect trading around big releases and big sporting events.
Utilities again, large transmission projects like the 1.2 gigawatt HVDC line matter because regulators often let companies earn on that capital. That supports defensive growth for yield investors.
Materials. Recent tungsten and silver deals and that big services contract point to near-term cash flow. Long-term, secured offtake and contracts lower execution risk and help finance future growth.
Real estate deal activity shows capital is selective but available. Industrial and multifamily still in demand. Office is very location dependent. That argues for targeted allocations, not blanket bets.
Industrials. The 10% tariff threat is the key headline. Even a threat can trigger cost reevaluation. If you own industrial names exposed to Europe, consider hedges or wait for clarity.
Crypto, steady but watchable. The price band around $92,000 to $93,000 reflects balance. But flow events from Davos or ETF creations and redemptions will create outsized moves.
Consumer and retail. AI initiatives matter if they show up in gross margin, ad conversion, and inventory turns. Walmart's moves are a good example of where investors should look for proof in guidance and KPIs.
Energy. Separate the short-term political noise from long-term decarbonization demand. If you want less permit risk, prioritize companies with flexible margins or integrated exposure rather than pure export plays.
Finance. Regulatory headlines and mortgage stress remain watchpoints. Banks that can capture AI-related fees or B2B services might stand out, but credit trends are the main macro lever here.
Healthcare. Real innovations can be re-rating events. Diagnostic breakthroughs and AI population health funding are catalysts. Small biotechs or partners in pivotal trials are the highest beta plays here.
Technology. AI keeps driving revenue potential, but regulatory scrutiny is rising. Differentiate between companies with clear enterprise AI monetization and those with potential compliance headaches.
So what are the practical actions? Favor project-backed regulated utilities and materials for defensive growth. Trim or hedge industrials with European exposure until tariff clarity. Be selective in energy and demand proof for AI claims in retail and CPG.
For crypto, size positions carefully and consider downside protection around big events. For real estate, lean into industrial and multifamily exposures and be selective on office. And for cannabis, treat it as binary. Wait for policy clarity or pick well-capitalized, state-focused names.
Catalysts to watch this week. Any formal tariff moves or guidance, Davos flow signals, hemp and cannabis regulatory updates, utility permitting decisions, earnings and guidance from big retailers, on-chain and ETF flow data for crypto, and healthcare trial readouts.
All right, let's close with 3 clear takeaways. 1. Favor companies with visible contracted revenue or regulated cash flows. That's where you get defensive growth.
2. Demand execution, not hype on AI. Look for measurable KPIs in the next quarter, not just press releases.
3. Size political and policy-sensitive bets conservatively. Tariff talk, hemp rules, and permitting decisions can move stocks more than fundamentals in the short term.
Good summary. Stay disciplined on risk management, follow the confirmed data, and don't let headlines alone drive reallocation.
That's our recap. Thanks for listening to Alpha Recap. I'm Martin. Stay curious and keep an eye on those catalysts.
And I'm Gareth. We'll be back next time with more sector insights. Take care and trade smart.